Good morning, everyone. Today is November 19th, Tuesday. This morning, there were a few trade scalper trades to go short. I'm not interested in the trade scalper at the moment because I've taken so much scalping trades recently in videos that I want to switch gears here a little bit and show you the Atlas line as well as the At the Open 2 software, the ATO software, and the Atlas line software. There's a signal here to go short. I want to take this short. I'm going to explain to you what the ATO2 software is all about. It's a once and done trade every morning.
Order filled.
So I want to be filled short. Today it happens to be 31.2175. This is not market replay. This is a live recording as the market is ongoing, working up and down. On the right hand side is actually the scalper, the trade scalper, indicating to me all the signals to go short and long. I'm really going to focus on the Atlas line and the ATO. And I have two charts up just to show you the two separate methods working side by side. So the idea here behind the ATO is to take one trade and be finished for the day, whether it be long, whether it be short. If it's a losing trade, there's a recovery, possibly. The Atlas line gives you signals all day long. I'm going to just make sure I set this right for the profit. Remember, the profit target is based on the current conditions. Something very important that I teach is that if you are taking a certain target and certain stop, it should be based off the current conditions. So you always know what the target is and you always know what the stop is. And I'm going to show you here the signals that were taken. So they're actually displayed on the chart. I want to see the text and the marker where I got filled. And so you can see as well where I get filled on these trades. They should be exactly the same or within a few ticks of the actual order. We're not chasing the market. I discuss this a lot. After the market moves, sometimes it's late. You're too late. You don't want to chase the market. You want to be in the market at either a better price or at the price displayed by the software. And again, the ATR is telling me about 2 points, 2.25. And there's now another signal to go short. You have an alert, a doorbell sound, or any other sound that you like linked to the software. But I heard the doorbell sound. It's telling me that there's an Atlas line short signal as well, 31.21. I would not double up. I know some of you have the ATO software, the ATO2 software, and the Atlas line. I know some of you have it, and you're indicating, should I double up? I would say no. If you're already short, hold it short. If you're not short yet, it's a great opportunity now to enter short. Remember to use your stop and your target as taught in the classes, but you should not double up. In my opinion, that's a mistake. So you're short. I'm short. The target, 31.19. Let's see if we get the target, and then we can be finished for the day. And if you want to scalp later on in the day, that's fine. You can go ahead and scalp for the rest of the day, even though if you made some money in the morning, you should definitely walk away. Tomorrow's another day to trade. I'd like to discuss now different types of markets because I do get a lot of questions on which markets you're able to trade. You can trade any market that you want as long as it fits the parameters. The parameters are volatility, liquidity, trading hours. Are you able to have a good spread if you're trading a Forex market? So you have to look at the markets that you're trading and ask yourself, is this the best opportunity that I have? For example, the E-mini S&P is $12.50 per tick. The Canadian dollar is $10 per tick, and the British pound is $6.25 per tick. So if you're thinking about trading one of those markets, you would probably want to trade either the E-mini S&P or the Canadian dollar. You'd want to stay away from the British pound because after paying commission to your broker, you're not based off how many ticks you can make, you're not really making that much money. So remember that. How much is each tick worth in the market that you're trading? Another example is the Dow Jones. Futures is only worth $5 per tick. You may not want to trade the Dow Jones. You may want to swing trade that market instead. So these are all things that you have to consider as a trader. Do I want to trade, for example, the Russell, and the Russell moves very strong and very hard. When you don't have to, you can trade the E-mini or the Nasdaq. Do I want to trade the DAX? I'd rather trade the FESX. It's a much better market to trade and safer than the DAX. All right. Now, as this is going in my favor, a lot of people, a lot of traders want to immediately tighten up their stop. I think that's a bad move. You should not put your stop so close and so tight to the market where it'll just bounce you out and take you out unnecessarily. The target of 2 points or 2.25 points is based off the ATR, the current conditions, which are acceptable. This is definitely within reason of a target to make. We're not looking for something that is pie in the sky for a target. This is reasonable for the current conditions. The slower the market, the smaller the profit. The larger and the more volatile these candles are, the larger the target. So it's based off the ATR. I like to use a setting of 4. That's my recommendation. You should take a look at it and see what is all about. Okay, there's a short on the scalper as well. I think that would have been a great trade to take, but I'm already short, so there's no reason for me to go short again because the trade scalper is telling me short. The target of 31.19 was tagged. They say it's tagged because it touched the price. If you have a limit order, you may not be filled. Consider using a market if touched order, MIT. Now, if it goes through 31.19 to 31.1875, you're fine. Every limit order got filled at 31.19 because it went through the price. It went one tick lower, one tick beyond it. So that price was taken out, and therefore everyone is filled. So think about what these orders mean. A limit order, a market if touched order, a stop order, a stop with a limit. All these orders have a purpose. So what I want to show you now is the trade to get out
Order submitted.
by placing an MIT order. So if the market just touches and trades at that price without even going through it, I'll be filled.
Order
But remember,
filled.
you may get a tick of slippage when using an MIT order. Completely acceptable in my opinion. You want to be out and you want to be done. All right. So you can see there either the trade scalper or the ATO or the Atlas line. Everything was short this morning. And all of these trades worked. They were successful. But remember, it's not always going to be this way. You have to also account there could be losses in the market, and that's why you should educate yourself before you start trading. Talk to your broker, understand what you're doing, ask questions, email us. DayTradeToWin.com has a next mentorship class starting. We'd love to have you and teach you how to trade.